All right, thank you, Christina. Good morning, everyone, and thanks again for joining us. As Christina mentioned, I'm Erin Clark. I am a member of the firm here at SEK with about 15 years of experience, and I am based out of our Maryland office, so I do predominantly, our Hagerstown office, so I do predominantly work on Maryland governments as well as nonprofits. So today I'd like to talk with you about establishing and maintaining effective internal controls. You know, internal controls are everybody's favorite topic. And so just to give you an overview, the real meat of the presentation is going to be the first bullet point here. And that is key controls, which is what you should be doing, why you should be doing them. And I've got a couple of graphics, hopefully, to drive my point home as to why it's so important to have solid internal controls within your governmental organizations. And then we're also going to talk a little bit about the key players who should be involved. That's who should be doing what based on the size of your organizations. And then we're going to wrap things up with adapting to changes in the workplace. So certainly no surprise, or I'm sure I'm preaching to the choir here in talking about how things have changed very progressively and very rapidly over the past few years, and specifically looking at remote work or hybrid work, as well as the increased use of technology. And we're going to talk about how those play into the internal controls that your organizations should have. So we're going to kick things off with what you should be doing and why. And the first slide that I have here is just, I have a couple slides of graphics that I'd like to share with you. And so you may or may not be aware, but there is an organization called the Association of Certified Fraud Examiners. And each year they put out a report from a study that they do on occupational fraud. So some of you may be asking, what is occupational fraud? That is more or less any type of fraud that occurs within the workplace. So that could be anything from an employee embezzling funds, stealing supplies, stealing inventory, to term you may have heard, cooking the books, and that could be just the misrepresentation of an organization's financials. So sometimes that's making the revenues and the overall financial statements look better than they really are. Sometimes it could be an attempt to make the organization's financials look worse than they are, to try to minimize tax liability. But it could really be fraud at any level within the workplace. And so these two charts show the overall results based on an organization type and organization size. So the graphic on the left here is what types of organizations are victimized by occupational fraud. And you can see we've got private company, public company, government, nonprofit, and other. And the government sector falls kind of right smack in the middle with a median loss of about $150,000, as well as percentage of cases being 17%. So just under 1/5 of the total organizations that were surveyed in this study were governments. I will give the caveat that that is across all levels of government. So there's national, there's state, there's local. So keep in mind that for the audience that we have here, it is a little bit skewed for some larger government organizations being included as well. But that median loss of 150,000 is truly a median. It's not meant to be representative of specifically the larger organizations, but it is meant to show a median loss for organizations within the government arena of all sizes. And then on the right side, you see the median loss and percent of cases based on number of employees. And while that's not government specific, I bring it up here because I know by and large, the majority of these organizations that we're serving are probably within those first two groups. So either under 100 employees, possibly within the 100 to 999, but certainly not much larger. And you can see there that the median loss in those cases is 141,000 for under 100 employees, 138,000 for the next level. And again, right around the just over 20% mark, or 1/5 of all cases surveyed within that organization size. So the main takeaway here that I'd like for all of you to know is that the presence of anti-fraud controls, and the study that I have here is really focused on anti-fraud, but really I would even say internal controls as a whole. The presence of having those controls in place is associated both with lower fraud losses and also quicker fraud detection. So you can see on the second part of this graphic that more than half of the cases studied occurred due to either a lack of internal controls or an override of existing controls. And that's why we're going to talk about the internal controls in today's presentation, not just making sure that you have them, but making sure that they're operating as they're intended as well. And I'm not going to go into much detail on this slide, but I just wanted to provide it for you to be able to reference. But you can see here a lot of other sort of graphic information with some key data points specific to government organizations as noted by this study. So I'd like to go ahead and really get into the meat of the presentation and go through a couple key processes that all of your organizations likely will have and what those key controls look like within each area. So we're going to start off with cash disbursements and purchasing. Even if you don't have a separate purchasing department, all of your governmental organizations are absolutely making cash disbursements at some level. And so the first key internal control that you really should have, regardless of the size of your organization, is some level of approval at either the invoice and or purchase order level. So even if you don't have official purchase orders, there's likely some process in place that somebody is initiating a purchase, whether it's to procure goods or services. And then you're being invoiced for those. So there, at some level, there should be an approval by somebody that has knowledge of the organization's operations that can approve the invoice that is being requested to pay for goods or services. At the next level, there should be an authorized check signer and or signing limit. So ideally, the individual or individuals that have check signing authority would be separate from the individuals that are approving those invoices. However, based on the size of your organization, we do see certain situations where perhaps a check signer is the same individual. And in that case, I would suggest one of two options that can be and or you can use both of these. First being that you would maybe have two check signers, especially if it's a check above a certain limit. And that would help to mitigate the fact if you do have a check signer that also has invoice approving authority. And then secondary, there should be signing limits so that certain individuals may only be able to sign checks up to certain amounts. And then again, above a certain dollar threshold, perhaps you have two required signatures or a different individual that is required to sign above a certain threshold. And that dollar limit is really going to be subjective based on the size of your organization. So whereas some organizations may say $10,000, $25,000 is a larger dollar amount that would require a second signature or a different signature, there might be some of your organizations where $2,500 is also kind of at that threshold. So really just depending on the size of your operations. Next, key control with regards to cash disbursements really comes into play when you have credit cards or employee expenses. So you should certainly maintain certain controls specific to credit cards, and that is limiting who has credit card access and who has the ability to make credit card purchases. And then ideally, the person that's reconciling those credit cards and making the final credit card payments should be separate from somebody that has the ability to make payments on the credit card. So you certainly don't want the same individual making an authorized purchase or what you believe to be an authorized purchase on a credit card, and then also having the ability to pay that credit card off and reconcile the account because it does run the risk that they could be making unauthorized purchases or personal purchases. Segregation of duties, you're going to see pretty much on every single slide because no matter what the process is, you want to segregate the duties between who has physical access of the account. So in this case, we're talking about cash accounts, maybe even some credit cards, compared to who has the record keeping in your either QuickBooks or whatever your general ledger software is, and then ultimate reconciliation of that account. Those functions should all theoretically be segregated among different people. And if they can't be, you want to make sure that you've got the controls in place to mitigate the fact that potentially the same person is doing some of those key functions. And then lastly, a key control over cash disbursements is to have proper general ledger coding. That's to make sure that whatever you're purchasing is being coded to the correct general ledger account. So very similar controls in place for cash receipts. I know that some of your organizations may not really have a lot of cash receipts because maybe you're getting most of your revenues in the form of an ACH or an electronic funds transfer from a larger governmental entity. But if you are receiving cash receipts, I would consider using a cash receipts log to track, and that's not just cash, but checks as well. Anything that you're going to need to deposit in your bank account. Again, segregation of duties between the physical access of cash and checks received compared to the person that is in charge with keeping the records or the books for the organization, making those deposits, and then ultimately reconciling the account. If you are receiving cash and checks within your organizations, the deposits should be done at your bank daily. If it's a minimal amount of activity, maybe a few times a week is more in line, but making sure that you're making those regular deposits so that you don't have cash and checks just sitting around. If you're not making daily deposits, I highly recommend restricted access to a safe that you can utilize on site to lock up, again, the cash and checks in between the period of time that they're being received and ultimately deposited. And then again, making sure that you've got proper general ledger coding. If you've got different revenue sources, maybe you've got some money coming in that is grant related, maybe you've got some rental income, there could be program services, there could be a variety of revenue streams. So just making sure that those are getting posted to the proper GL accounts. I do see a polling question pop up, so please make sure that you're answering that. As we move into the next area of internal controls, we're going to talk a little bit about payroll. So first and foremost, that includes annual approval as well as documentation of said approval of your pay rates. So that's going to include all of your employees. If you have elected officials that maybe have a stipend, there should be some approval of that as well. And again, documentation of that approval. And that just makes sure that your employees and anybody that is on your organization's payroll is getting paid at the pay rate that has been approved by an authorized individual. Similarly, if you've got employees that are hourly as opposed to salary, there should be some sort of supervisory approval of time cards. And again, that's going to be contingent upon who best knows the employee. So making sure that they are truly getting paid, not just for hours worked, but also if they're taking time off. And if policy dictates that they are able to be paid for PTO, we want somebody that can be reviewing and approving time cards to ensure that they're being paid not just for the time worked, but for any compensatory time that is owed to them and that was truly taken. Again, proper general ledger posting and allocations. I do want to mention specific to payroll, if you have employees that are working in multiple funds, making sure that those allocations are properly recorded. So for example, I have some governments where there are some employees working among general water and sewer funds. So for example, they may be a water and sewer maintenance individual that's also involved with some public works. And so they are allocated among multiple funds in terms of the work that they're doing. So you want to make sure that the payroll expense is also being allocated properly for proper financial reporting. And then lastly, looking at quarterly 941 reconciliations. This is something that we're looking at many times as part of the audit, but it's also a great control to have in place to make sure that you can reconcile quarterly 941s that you're filing with the IRS for payroll tax purposes and looking at the general ledger to ensure that the salaries and payroll expenses that you're recording on your general ledger can be reconciled with what you're reporting on your 941s, as well as payroll reports, whether you're running payroll out of your general ledger software or if you use a third party. All of those reports should be able to be reconciled. And that should at least be done on a quarterly basis to jive with the quarterly 941 recs that you're filing, or quarterly 941s that you're filing. And then I'd like to just look overall at financial reporting. So Kevin and Krista talked about reconciliations earlier in terms of getting ready for the audit, but this should be a monthly reconciliation that you're doing for all of your bank accounts, so all cash and investments. If you do have CDs or investments that don't have a lot of activity, it is possible that a quarterly reconciliation would be sufficient. But by and large, we would say that generally speaking, monthly reconciliations should be performed on all of those cash and investment accounts. And if your organizations are reporting on an accrual basis, You should also be reconciling your receivables and your payables on a monthly reconciliation as well. Monthly financials, this would be things that hopefully reports that you're providing to those charged with governance just to monitor the financial performance of your entities. So that would include generally a balance sheet as well as profit and loss and a profit and loss compared to budget. So I know I have budgeting last here, but budgeting is a key internal control, and monitoring that budget throughout the year by comparing your actual P&L to what you have budgeted is a great way to sort of track your revenues and your expenditures and determine where you may be missing the mark. And if there are items that aren't jiving with what you had budgeted, you should either be able to explain those or you should be able to have some sort of follow-up to figure out, why are my expenditures tracking higher than what I had budgeted? Why are some of my revenues maybe lower than budgeted? And having these key controls in place then will allow you to follow up on any discrepancies and not just wait till the auditors come in at the end of the year and start questioning any large variances between some of these accounts. And then lastly, journal entries. Again, we talked about those a little bit earlier this morning as well, but anybody who is actually posting journal entries, there should be a second person reviewing those, whether it's actual journal entry reports that they're reviewing or whether it's in the form of the review of the monthly financials. Making sure that you have that oversight of the financial reporting and of any entries that are being posted is a critical internal control as well. So I'd like to also talk a little bit about IT controls. First and foremost, the person or people who have physical access. So that's going to be access to your computers, to your server, any type of ability to be able to access data that within the organization. We need to make sure that that is restricted only to those individuals that you have determined should truly have physical access. Data backups. Regardless of whether you're utilizing QuickBooks or another type of general ledger software, or if you're doing things in Excel, I suppose it's possible that we do still have folks doing some paper reconciliations still, although I do see that less and less frequently now. But you want to make sure that whatever data you have and whatever environment that that's in, you have it backed up and locked up in a place that if there were to be some sort of either natural disaster or computer issue, that you would have access to be able to back up the files and you would not lose those files. And then lastly, we talk about the concept of logical access. So not just physical access in terms of who can access your computer, but who can actually log into your general ledger software, who can log into your bank or your investment accounts to track activity, run reports, look at bank statements. Again, those should really be, the access to each of those should really be restricted only to the individuals whose job duties require them to have said access to each of those accounts and general ledger software. So I'm not going to spend a lot of time on this slide, but again, I just wanted to provide another graphic for you all to see how different detection methods of fraud actually are deemed to be important. And you can see the different categories, whether it's by anonymous tip, internal audit, management review, which really is a key control because again, it gets back to that second set of eyes. Document examination, account reconciliation. Again, you can see a lot of different pieces here that really fall into how fraud gets detected. But again, if you take a step back and you aren't even looking at it from the fraud perspective, but just having good internal controls in place, which also helps to minimize just errors. So financial reporting sometimes isn't wrong because of fraud. It could just be because of errors or somebody not knowing what they're doing and what they're recording. So again, just wanted to show you all this graphic of how fraud gets detected utilizing these different methods and why it's so important to have internal controls. So now that we have focused on what controls you should have in place, and hopefully you understand why they should be in place, let's talk a little bit about who those key players are. So I recognize that, again, we have different size organizations on the call here. Some of your organizations are much larger and have a more robust accounting department or financial reporting department. So really, the key players just depend upon the size of your organization. But by and large, the main driver is that we want to make sure that we've got independent reviews. So whether it's independent reviews of account reconciliations, independent reviews of financial reporting, journal entries, whatever the case may be, you want a second set of eyes on all of the work that is being done. So the first slide here shows if you have perhaps a little bit of a larger, more robust accounting department, and let's say you have a clerk or a bookkeeper that is doing the work. Ideally, then there would be a CFO or more of a director management level person reviewing that work. Then, if you had the CFO or director actually performing some of those account reconciliations, ideally a town manager or town administrator, again, independent of the person doing the work, would ultimately be reviewing it. The next slide then shows a situation where maybe you have a smaller government or a smaller accounting department where maybe you don't have that CFO or that director of budget and finance or related personnel. So if you have, again, just the clerk or the bookkeeper that is doing the work, you may have a treasurer or whoever the role in an individual charged with governance may be reviewing. And then to the same degree, perhaps you've got a town manager or town administrator level of the government doing some of the financial work. And again, that review then could default to a treasurer or a mayor, or again, just whoever the individual charged with governance. But the main takeaway here is that there absolutely needs to be a second set of eyes or that review mechanism so that somebody who is not tasked with preparing the reconciliations or doing the daily bank deposits or writing all of the checks has that fresh set of eyes to make sure that things were properly paid or receipts were properly recorded and that the accounts were being reconciled properly. And so the last piece here we're going to talk about is adapting to changes in the workplace, and specifically how increased technology and remote workers have impacted internal controls. So again, I've got another graphic here to start that comes from the same study that I've had these graphics from throughout the presentation. But this shows to what extent pandemic-related factors contributed to occupational fraud. And while I do see a lot of folks that have reported in this study that they didn't feel that it was a factor, you can see that we do have quite a few items that report different folks say it was a significant factor, some say it was a moderate, some say it was a slight factor. But there was definitely some impact that the pandemic created. And so you can see starting at the top, things like organizational staffing changes, the shift to remote work, going further down, operational process changes and internal control changes, things like supply chain disruptions. So again, this isn't specific to governmental organizations, but really all organizations across all industries have been impacted by post-pandemic related factors. And so I wanted to spend a few minutes here talking about how that impacts the control environment and what you should be doing if you haven't already made changes to adapt to the changes that we're seeing post-pandemic. So first, I'd like to talk about technology and labor force changes. Electronic records and invoices. This is a great example where a lot of our clients are starting to no longer receive paper invoices. They're getting, if they weren't already receiving electronic records during COVID or electronic invoices, many of them now are getting that. So what do those controls look like? What does the approval process look like if you aren't receiving a manual paper invoice in your office? Similarly, with a remote workforce, some of you may have some of your accounting folks or even non-accounting folks who are working remotely or maybe in a hybrid situation. So if they are charged with paying these invoices or logging cash receipts, what does that look like? So often I walk into a client and one of the first things that we're doing is asking for review of the internal control documentation updates and to be made aware of any changes. And I might hear, oh, well, we didn't have any changes. But then we find out that some of their employees are now working remotely, or they are receiving records electronically, whereas previously they were receiving manual copies. And so that does change the narrative. That does change the control environment and ultimately what controls you have in place to ensure that you're still doing the same functions, but maybe just in a slightly different environment. Similarly, who has access to accounting records? So again, we talked about the IT access. That may look a little different if you have folks that are working remotely or working hybrid. Again, we talked about approvals, but what does the approval process look like if you're not just walking across the hall or to a different desk, within your office setting to get an approval? And then lastly, what does the documentation of that look like? So as your auditors, we're coming in and we're wanting to see the approvals and making sure that if there was a pay rate change, that it was documented properly or that an invoice was approved. And having the documentation may look a little different, again, if you're no longer signing off on a paper file. But maybe that approval is now being done electronically, and you want to make sure that you can still show to us the documentation considerations that were made so that we can get a good feel for the controls that are in place and know that they're still being, they've still been implemented and that they're still operating effectively. And so my last slide here then is on internal controls during a period that we've heard deemed the Great Resignation. So whether that is folks that, you've got positions that maybe you have been trying to fill large vacancies for a while, or there's just been a lot of turnover in certain roles, what are some key controls that you should have in place to help in this sort of new Great Resignation era? First and foremost, if you didn't already have policy manuals and written procedures, that is absolutely critical to ensure that if you do have periods of vacancy, you can default back to written policies and written procedures so that folks that maybe historically weren't involved with certain roles know what needs to be done. The access control. So again, if you have an individual that terminates with your organization, not only do you want to make sure that their access is immediately revoked so that they no longer can access your general ledger and your bank accounts and things like that, but whoever's going to be stepping in to do the work on the interim will need to have access if they didn't already have that. Similarly, you want to make sure that you've got the right backups in place during any period of position vacancy. So whoever's filling that role needs to know, again, what controls are in place, what procedures need to be followed to make sure that business can continue as usual, regardless of a specific position maybe not being filled. And then also you want to make sure that you're looking at your use of service organizations. So whether you've always used them, whether you're using them to fill or complement positions that you don't have internally. I see that very often in payroll, but it certainly could be within other pieces of your organization as well. But understanding what those service organizations are doing, understanding what controls they have in place and what complementary controls your organizations should have in place to make sure that, again, all of the components that we talked about, whether it's payroll, whether it's cash receipts, cash disbursements, general financial reporting, you want to just make sure that anyone that's doing work for your organizations that's not an actual employee, you need to understand those controls as well and make sure that they truly do complement the work that your organization is doing and the processes and procedures that you have in place. So with that, we are about right at the end of our time, and I have not seen any questions come up in the chat, but certainly feel free to ask if anyone has questions, or you have my contact information there as well. You're welcome to call or email if you have a question specific to your organization that you did not ask during the presentation.